Oh my God, I lost 200K. Oh my God. Does anyone have the number for Coinbase? Can I call Coinbase? Hello Coinbase. Hello?
Need fire, police or ambulance?
Pardon?
Do you need fire, police or ambulance?
Hey friends, welcome back to the channel. This is Altcoin Era, and this is your boy Ahmed, and today we're gonna look into the cryptoverse. There's a lot going on. It's been a really stressful week for all of us. Make sure that you like, subscribe, stay to the end. You're gonna enjoy it. And without further ado, let's begin. BTC yesterday dropped 11%, ETH dropped 22%, BNB dropped 16%, Solana dropped 11%, XRP dropped 15%, and some altcoins dropped 20%, 30%, and some of them even 40%. Likewise, the Nasdaq and S&P 500 was down massively. Microsoft was down 5%, Google 5%, Apple 7%, Nvidia 12%, Meta 6%, Netflix 4%, Oracle 5%, Amazon 7%, and the list goes on and on and on. It was a bloodbath. You know what's so funny? McDonald's was actually up.
Making.
What some would call history in the making.
Scary,
don't say that.
We have never been down 1,000 points ever, not even intraday on the Nasdaq.
Is that true?
That is true.
Okay. And down 6% right from the get-go. This is heavy big tech. Here we go. Look at them go down. Microsoft is down $20. That's 5%. Alphabet, 5%. Meta, 6%. Amazon, 6%. Apple, 9% down. Let's pull out Apple.
The Nikkei had the biggest two-day drop in history, superseding Black Monday in 1987. Here is the Nikkei, and the Nikkei dropped a massive amount from the peak till here. Literally in a few days, we dropped 29%. However, on the bright side, we had a massive reversal, and it's the biggest in history. Are you not entertained? It went up 14.82%. A huge comeback for the Nikkei. Here is a chart of BTC, and I was right. I did say that we're making lower highs after lower highs after lower highs, and then again we made another lower high. This looks like a fake out, but I'm not here to gloat. I was right. Here's a previous video of what I said earlier. As of today, we're ahead of schedule. We're really ahead of schedule compared to all of the other charts. We might see a black swan event. We could either come back down, because we are ahead of schedule. We could come back down, and then we could get around here. We could hit the 50K mark, and then we can go right over here. Then finally we can break out after 220 days. So Q4 we can break out. We have a small little correction. We go back to the scene of the crime, and then finally we make a massive parabolic run. Here is the Ethereum chart, and if we scroll to the 1 hour, let's check the 5-minute chart. Within a 5-minute candle, we dropped so hard and so aggressively. We dropped literally 9% within a 5-minute gap. And the reason this happened, the reason all of this happened, was due to jump trading. ETH is down 20% in the past 5 minutes as some over-leveraged Japanese trade blows up. It turns out Jump Crypto was swimming naked. They became forced sellers due to the cash and carry trade. They unstaked a whopping $315 million of ETH and sent more than half of that to crypto exchanges. As you can see here, in the past 7 days, they've been moving so much Ethereum to exchanges, and this caused the massive dump in Ethereum. Here is Jimmy Siegel, and he's a professor of Wharton University.
We've talked about quite a bit. It was down in the low teens. Up 26 points a day. It's been over 50 at one point, 49, 80, and Earlier, Tom Lee said when we see the VIX peak and maybe come down a little, that could indicate some type of bottoming. Joining us now is Jeremy Siegel, Professor Emeritus of Finance at University of Pennsylvania's Wharton School of Business, Chief Economist at Wisdom Tree. Jeremy, I hate, you probably aren't happy to say I told you so either, given what we're witnessing. But you thought the Fed was staying at, once again, for the second time, staying at the party too long and too restrictive.
Absolutely. And, this may surprise people. I'm calling for a 75 basis point emergency cut in the Fed funds rate with another 75 basis point cut indicated for next month at the September meeting. And that's minimum. The Fed funds rate right now should be somewhere between 3.5% and 4%. Let me give you very simple logic of my position here. At the June meeting, the Fed has said that the long run Fed funds rate, when inflation reached 2% and unemployment has come up to 4.2%, should be 2.8. That's the normal. 2.8 is the normal Fed funds rate. Well, on Friday, we blew across the employment number. We're at 4.3. That even argues for a lower one. Now, as far as inflation, we're at 2.5%. We've gone down 90% towards the target on the inflation rate. We've overshot the target on the employment. Those are the two targets explicitly mentioned by the Federal Reserve. All right, and how much have we moved the Fed funds rate? 0. That makes absolutely no sense whatsoever.
I'm only laughing because he looks like he's about to have a heart attack. He looks like the Fed is going to cause this man to have a heart attack. Look at this man. Save him. Please, Fed, save him. Amongst all of this fear, this tension, and this massive, huge crash that we just witnessed that almost is the same size as COVID-19 crash, Bitcoin whales increase holdings during crypto market mayhem, but ETF investors didn't buy the dip. Bitcoin wallets holding between 1,000 and 10,000 BTC increased their holdings while prices slide over the past few days, while those owning less than 1 BTC were sellers. Here is a better illustration of big whales. BlackRock has been buying, literally buying Bitcoin. It hasn't sold a single BTC. Let me repeat myself. During this massive epic crash, BlackRock hasn't sold a single BTC. Here is a better illustration, and the yellow line marks the wallets that are holding between 1,000 and 10,000 BTC, and literally it's been going straight to the right. They've been buying the fear, they've been buying the blood on the streets. Meanwhile, the small fish, the holders that are holding between 0.01 and 0.1 BTC have been selling. Mr. 100, our favorite guy on the show. One day he'll be a guest on this show. Mr. 100 has been buying the dip. Literally, he bought the dip on the 6th. At 12:30, he bought 100 BTC on the 6th of August. Then at 9:52, he bought another 100 BTC. Then on the 6th of August at 7 o'clock in the morning, he bought 100 BTC. You get it? Then again at 4:52 a.m., he bought 100 BTC. This is why we call him Mr. 100. Here is the stock to flow model. And what is the stock to flow model? The stock to flow model is a forecasting tool for Bitcoin price. It creates a line on the chart above that shows an estimated price level based on the number of BTC available in the market relative to the amount being mined each year. We find ourselves deviating from the stock to flow model, but it's not a far off deviation. Let's have a look at the Pi cycle indicator. And as you can see here, the pi cycle indicator is not flashing. We haven't even passed the 200-day moving average. At the moment, we're below the 111-day moving average. It normally takes us 200 days to go above this point. Bitcoin jumps above 56,000 US dollars, and Solana leads the recovery from Monday's rout. CoinGecko data showed that BTC added 6% to its highest 24-hour price index since May, triggering a wider market recovery. Ethereum and XRP added 8%, BNB rose to 12%, and Solana surged as much as 16%. After this massive, huge crash of 25%, guess what? The entire ecosystem of Ethereum was still running perfectly fine. Aave was working perfectly fine. MakerDAO, JustLend, EtherFi, Rocket Fuel, even Athena was up and running. Pedal, Uniswap was up and running. All of these apps were working perfectly fine. The mighty Charles Schwab, TD Ameritrade, Vanguard, E-Trade, and also Vitality were all down. Yet Aave, Uniswap, MakerDAO, all of these apps on Ethereum were ticking along perfectly. What happens next? That's the big $1 million question. What happens next? This is the S&P 500. And as you can see here, we had a massive drop. You felt the pain. We all felt the pain. Firstly, what it's going to do is it's going to fill these gaps. So as you can see right here, there's gaps all over the place. There's gaps here and here and here. This was a moment of pure panic. It really didn't need to be this extended. So we're going to go back into this area. Most likely, we're going to wait for the economic data to come in. Once that comes in, then we're going to see further drawdown, or we're going to see a recovery. Every time we have a massive crash, it's not the bottom. Every time we have a massive crash, guess what? It's not the bottom. I'll show you a very good example here. We had a massive drawdown in the S&P from here all the way here. All of this is all related. Since BTC is now in the mainstream media, since we have big holders such as BlackRock and Vitality, they're all intertwined. So as you can see here, the Nasdaq dropped a whopping 12%. Guess what? People jumped in, and what did they think? They thought, oh, we've recovered now. We had a massive 7% drop. Then we had another rise again from here all the way to here. We had a huge increase of 16.25%. Shortly after, guess what happened? We had a massive dump, and then we made new lower lows. We had a massive drawdown from here all the way to here, which was 20%. But the point I'm trying to make is this: we ultimately had a massive recovery from here to here, which was at 8%, give or take. Anyway, we thought it was the bottom, and everyone else was happy, plain sailing. We're all having fun, we're laughing, and guess what happened? Well, the rest is history. We made new lower lows. On the left, we have the Black Swan event of 2024, this period right now. Then we have a Black Swan event of 2020. We had the COVID crash, and the charts look very similar. But the question is this: will we have a recovery just like 2019? And the answer is very simple. The Fed stepped in during this time, and they literally printed money. They printed almost 2 trillion in that time period. Where is the Fed now? Where are they now? They haven't even spoken. So this surely cannot be the bottom. I found something interesting, and I think it might help you along your journey. This is the monthly, and right here is the VIX. If I overlay the VIX right here, you're going to find something really interesting. Now, as you can see here, we found a bottom. This is an argument to finding a bottom. It could be an argument, but it's not 100% accurate. I won't really use the data, past 2019, but it is very, very interesting how it finds the bottom. Right here, we had a spike and it marked the bottom, interestingly. Then we had a huge, massive spike on the VIX, and ironically, it found the bottom. We also had a spike here, which is not really conclusive to this argument. Then we had another spike, didn't really work. Then we had another spike here. It also found the bottom, but 3 days later, that was the absolute bottom. If BTC closes above this channel and doesn't confirm it as a resistance, it's very, very important that we don't fall underneath this parallel channel. If we hit this as resistance, then that means we're heading lower. If we hold and close above this channel, above this trend line, then we're possibly going to hit the upper middle part of the trend line. My next target is at 61,000, but it's imperative that we close above this channel. If we don't, then unfortunately, my next target is going to be this wick. This massive wick, there's massive longs in this area. There's scalp traders. There's a lot of folks sitting right here. And if the whales want to draw in more liquidity and wipe out these folks, then we're probably going to head to this area around 50,000. I was right. We did hit this target. If that doesn't hold, then of course we're going to hit my long to medium term target, and my target is between $41,767 and $43,570. In a few days or a few weeks, this is going to cross and we're going to have a death cross. We normally rally into a death cross and then we head back down. We've done it multiple times during the life of BTC. Here is a death cross and we rallied into a death cross and then we headed back down. Another time is here, we had a death cross, and so we rallied into this death cross and then we headed back down. If it holds on the weekly, then this is going to be bullish, because look at this huge wick, this massive buying wick. If it turns green, it's going to be even more bullish. Ethereum price targets currently at $2,494.15. We're up 2.99%. We're probably going to recover, get to this area at $2,968. We hit this resistance many times. If we don't hold this resistance, then it's just thin air. My next support is at $2,437. This is a great time to DCA. There's a lot of fear in the markets, and one rule of thumb is whenever you feel sad, that's probably the best time to buy. Whenever you feel euphoric and elated, that's probably the best time to sell. Solana price targets currently at $145.81. We're up a massive amount at 12.265%, which is incredible. We had a big, huge bounce, but this is probably the scalp traders, some of the long, quick scalp traders that participated in this huge run up. It went up 34%. Now remember this, volatility, please remember this, volatility is never ever a good indication of where price is heading. This is the Widowmaker, and as you can see here, we had a massive, huge pump. From here to here, we went up 45% in just 7 bars. And guess what happened? Shortly after, we went all the way down. And again, we had some more volatility. From here to here, we went all the way up to 20%. Then we went down again, another 25%. Okay, and again, we had some more volatility, went up 27%, went down 20%, up again from here to here, 36%. Get my picture? ADA price targets currently at 33 cents. And we have dropped a massive amount. From wick to trough, we've gone down 65%. my next area of control is, of course, this area right here at 24 cents. If that doesn't hold, then we're probably going to nosedive to 19 cents. I forgot to finish my TA in Solana. So Solana is probably going to hit this resistance, come back to this area. If it doesn't hold this area right here, we're probably going to nosedive straight to $110, then to $101. Matic price targets currently at 41 cents, and we're down 6.76%. I did say if we don't hold this trend line, then most likely we're going to break it. This looked like a fake out, and we're heading even lower. Currently, we're just at the precipice of falling off a cliff. The last time we were here was in June 2022 at 31 cents. This right here is going to be thin air. If we don't hold that line, then of course we're heading further. I don't think it's going to happen just yet. This looks like a fake out. I think we're going to head back higher and ultimately go back into the range. Phantom price targets currently at 31 cents, and we're up 8.81%. This is the weekly, and most likely we're going to head back to this area. I think alts are going to continue to bleed. Definitely have nowhere to hide at the moment. I think BTC is sucking all the liquidity out of alts, and most likely I think we're going to retest this area right now. Most likely we're going to retest this area. We've hit this support line multiple times. 1, 2, 3, 4, 5, 6, 7 times. This is going to be very important that it holds this trend line. If it doesn't, then we're going to head to this area right here at 4 cents. A lot of alts are really close to their massive support lines. Likewise, BNB, very close to its support range right here. The last time we were here was literally in 2022 of April. A lot of these coins are showing the same kind of pattern. They're really close to their previous major support lines. Polkadot price targets currently at $4.56, and we're up a massive 8.66%. Remember, this is the weekly, that's why it doesn't look green. But as you can see here, we went all the way to the absolute bottom, like all the way there. We retested this area, and if we go back to this area, hit it as resistance. If we go back to this area and keep hitting it as support, you know the rule of thumb. Every time it hits this trend line, it gets weaker and weaker. And if we don't manage to hold, then ladies and gentlemen, we're going to have price discovery to the downside. Ordinals price targets currently at $26.51, and we're up a massive 12.19%. Now ARB is back in its range lows. We're most likely going to bounce. Honestly, it looks like we're going to bounce and probably go back to this area. Some of these coins look really oversold. But the point I want to emphasize to you is even if it's oversold, it can be oversold for weeks, months at a time. So for something to be oversold, it doesn't really matter. A lot of altcoins have dropped a massive amount. Now remember, what kind of participant are you? Are you an investor? Are you a trader? What kind of person and participant are you? I am an investor. That money doesn't matter. In the grand scheme of things, these coins will rebound and go higher and higher. You have to figure out what kind of participant you really are. I'm going to continue. Look. I'm going to continue. Come closer. I'm going to continue to DCA. I'm going to continue to buy and to DCA because at the end of the day, I am a long-term investor. I trade coins, but I also have a spot bag. And crypto is definitely going to go higher. I want to conclude with something. And I live in the UK and there's riots at the moment. So people are thinking it's down to immigration. People are frustrated and people are getting poorer people are losing their jobs, and their purchasing power is decreasing. And the answer is very, very, very simple. It's got to do with your money. Point blank, period. Central bankers have made you poor. They have given you a currency that is pegged to zero, to nothing. You're getting poorer and poorer while they are printing their problems away, and they're passing it onto the general public.
They always tell me that the problem is high taxes, but they're wrong. Of course, high taxes are extremely high here in the United States. I give you that. The real problem is not the high taxes themselves, but the fact that they are not even really funding the government. Not even those high taxes, higher than a lot of places in the world, not even those taxes are really funding the government. So who's financing the government? Government is financed by treasury bonds. And who buys the treasury bonds? Mostly the Fed. And how does the Fed buy them? By printing money. But what backing does the Fed have for that money being printed? The treasury bonds themselves. So basically, you finance the government by printing money out of thin air. Well, so if the government can print unlimited amounts of money out of thin air, why do they collect taxes? The answer is simple, but it's very shocking. The real problem is that you pay high taxes only to uphold the illusion that you are funding the government, which you are not. It's shocking, but it's true. The government is funded by money printing, paper backed with paper, a bubble that will inevitably burst. The situation is even worse than it seems, because if most Americans and the rest of the world were to become aware of this farce, confidence in your currency would be lost, the dollar would fall, and the Western civilization with it. If the next president of the United States doesn't make the necessary policies and structural changes, sooner or later that bubble will burst. There's still time. You don't have to make the same mistakes we did in the 60s and the 70s. You can still jump before the water boils. Winning the election isn't enough to solve these problems. They will not simply go away as a consequence of an electoral result. It will take a total re-engineering of the government top to bottom. It will entail making difficult decisions. It will be hard. The system will push back, but you have the right to determine your own fate.